First, though, joining me now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, great to see you. Thank you so much for being here this morning. What are your expectations for the week in terms of these earnings coming out, and how do you want to be positioned this year in 26?
Maria, very much a lot at stake this week, especially, as you said, Microsoft, Meta, Tesla, and Apple. So we're going to be looking very carefully at what they're going to comment on regarding the deployment of AI. You know, this buildup of AI has been fantastic over the past 2 years. Now I think it's time to actually focus on how is this going to translate into profits. So this is going to be very controversial because I don't expect them to actually have any concrete answers. And most importantly, and I'm not sure how many people are aware of this, but it has recently been proven that all LLMs will never be 100% correct. That is, to me, astonishing. That means there will always be errors in these agencies. And so the impact of that is, will companies feel confident enough to deploy LLMs, say, on their assembly lines? So these are the things that these companies should focus on. I hope they will in their earnings conference calls.
You know, it's incredible to me, the kind of demand that we're seeing. We spoke with Jensen Huang this week when we were in Davos last week for the World Economic Forum, and he continues to talk about trillions of dollars in spending toward data center buildouts and AI. I want to see this week if we're going to hear specific numbers in terms of what these companies have been spending on AI, because here's what Jensen told us last week about the demand situation right now. Watch this. Tell us about business and what you are seeing right now from customers.
We are seeing just incredible demand. And what's going on around the world is that AI, as you know, is a 5-layer cake. It starts at energy, then chips, the layer that we're at, infrastructure, cloud infrastructure, land, power, shell, building data centers. And then, of course, the AI models. This last year, AI startups, we call them AI natives, these startups raised $100 billion to build on top of the AI models. There are applications for healthcare, applications for drug discovery, for transportation, financial services, you know, helping with making healthcare more efficient, all kinds of different applications. And so the demand is just incredible.
Peter, obviously the demand is there, but do you think investors are going to react to all of this spending? Remember last week there was disappointment with some of the banks when they reported because of the spending. They're spending so much money on so much, particularly with this group, these hyperscalers that are reporting earnings this week. What do you think the reaction will be?
I couldn't agree more with you. I mean, this spending is almost out of control, and yet it is all on a promise that this is going to be profitable. Let me just pick one part of what Jensen said. I think he was commenting on healthcare. Well, the implication is that you would need a large language model to be 100% correct for a physician to rely on that kind of diagnosis. And as I said earlier, Maria, there are no LLMs that will ever be 100% correct. So I'm wondering what Mr. Jensen means when he says that this will be adopted by the healthcare industry if they don't have confidence in the answers. This is something, I hate to harp on this, but I do think it's pretty material, and that most of us are thinking the more research you do, the more money you throw at LLMs, the more accurate they will be. But there has been mathematically proven by several independent researchers that this just ain't going to be the case.
Yeah, very good points all around. We got to get to the Fed, Peter, because interest rates this morning are on the move. Let's take a look at the 10-year with the yield on the 10-year right now trading up earlier, but we are looking at it pulling back this morning by better than 2 basis points. The yield on the 10-year now at 4.20%. The Fed, of course, is kicking off its first meeting of the year tomorrow. We are widely expected that the Fed holds rates steady after 3 straight rate cuts. Inflation above the Fed's target still as the job market gradually cools. This administration has been able to rein in inflation in a big way, but we're watching Fed Chair Jay Powell's comments around Fed independence and future rate cuts. What are you expecting from the Fed meeting this week?
I think it's going to be, as you said, that there will not be many changes. And, you know, it's in such flux right now. As you mentioned, they will be deciding who will be the next leader. And so that is an issue that I think is going to eclipse any kind of analytics right now. I would be very much surprised if they made any active decision, either raising or lowering in this case. And I think you will have to wait until, say, mid-year before the dust settles, when we can actually see some real brain power coming out of those committee meetings right now. I think that they're very, very distracted in the current state.
Ryan Payne, jump in here. Your thoughts on the week of earnings in terms of big tech, as well as the Fed meeting this week. This could be a big market-moving meeting. Ryan Payne, jump in here.
Yeah, Pierre, I think you don't need a weatherman to know which way the wind blows. I like to say here when it comes to the Fed, I mean, I think you're right. We're going to see them hold steady here. But let's face it, I mean, inflation's still 2.8%, and that core PCE is still not that low. And if I start looking at those economic growth numbers, which we just re-rated higher for last quarter at 4.4%, now we're looking at 5.4% for this quarter. It looks to me like the earnings picture is going to be phenomenal, right? We're looking at record earnings here this quarter. And I agree with you with big tech at some point that spending has to slow down. And I always say I'd be on my yacht if I knew that magical day. But it seems to me right now, if you look at the earnings picture, and it looks like they aren't going to disappoint the Magnificent Seven, especially before that report this week, we could see another big leg higher in those Mag 7 stocks, even though they haven't done much this year. I suspect here that the party's not over.
Yeah,
Peter,
I agree with you that, sure, earnings will be strong, but we will all be looking, as we usually are, but with even more emphasis on what are they going to say about when this actually turns into dollars to shareholders. That will be the main theme on all the earnings conference calls, I'm hoping.
All right, we'll be watching all of that. Peter, great to check in. Thanks so much.
You're welcome.
All right, Peter Andersen, stay with us. We'll be right back.